Okay, getting started. Okay, ladies and gentlemen. Hello, hello. Welcome to Bulls versus Bears Weekly Forex Forecast. My name is Dr. Gregory McLeod, and I am the CEO and founder of Elite Traders University. I'm so glad to be here with you to be able to give you the forecast, our weekly market forecast. And so we're going to be looking at the economic data that's coming out for this week. This week, can you believe it? We're 7 days outside of Christmas. I hope you've done your shopping and hope you've been nice and not naughty, so you won't get a lump of coal. So anyway, it's a wonderful time, one of my favorite times of the year, the Christmas time. It's a time of family, of food, and of looking back at the year and also remembering our Lord and Savior Jesus Christ, the reason for the season. Always remember that. But it's also going to be a time of lower volumes in the market. Even though we have a lot of economic data coming out this week, we have the Bank of Japan rate announcement coming out. We're going to talk more about that. We have some UK inflation data, retail sales data, Canadian inflation data. So a whole bunch of last prints for the end of the year, which the big theme of 2023 has been inflation watch, inflation watch. So now we've actually, we've seen 500 basis points of rate hikes, but we just had the granddaddy of them all, the U.S. Fed, the Federal Reserve, who basically kind of sets the tone for interest rates around the world. And you had Jerome Powell keeping rates unchanged, but also stating that we're going to see 3 rate cuts in 2024. And so that's something that he announced. He said it out of his own mouth, and the markets went crazy in the bullish direction for the risk on currencies. The indices all rallying, as well as lower interest rates usually mean lower borrowing costs. It means people could buy houses, they can start buying things. Credit card interest rate payments are not going to be as expensive. Goods in general drop in price because companies, when you raise interest rates, you increase the borrowing costs of companies, and they pass those extra costs to consumers when they can. And if they can't, then they just stop producing. So this is exactly what the Fed wanted. There's a softening of the labor and a lowering of the of inflation. So now they can take their foot off of the interest rate accelerator, and we could start going. The rates could drop down as we get closer to that 2% inflation target. So let's get right to it. I gave the summary of that, but let's go ahead and I'm going to share my screen and let's get on to it. Let's get on to the markets, and we'll share with you how I look at the markets using my market heat map, the arrangement of currency pairs by percentage change. It tells us what's popping, what's dropping, and what's popping, what's dropping, what's hopping, and what's not, right? So we're going to share screen number 1. We'll go ahead and share that. And all right, this we go to view. Okay, you can see my screen. Awesome, guys. And I know you're probably in the welcome for the people who are on YouTube or watching this live. And again, this is brought to you by the Elite Traders University. This is we actually show people how to trade profitably in 90 days. Hard to believe. A lot of people don't believe it, but we have people who have learned my proprietary system. I used to work for a Forex broker dealer as a currency analyst, strategist, and trader coach. And being on the inside, a Wall Street insider, there's things that we know that the rest of you guys don't, and we share it with our students here at the Elite Traders University. And so Elite Traders University, elevate your trading to new levels, change your trading, and change your life. Elite Traders University, www.elitetradersuniversity.com. Okay. Weekly Forex forecast coming your way right away. But before we get started, I want to direct your attention to the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading. And I've been doing this for 30 years. I'm a trading veteran. I trade everything from options, stocks, crypto. I'm one of the foremost authority on short-term day trading called scalping. I was a currency analyst for the world's largest Forex broker dealer in the world. I graduated from UCLA, one of the top 20 public universities in the United States. I hold a doctorate in Christian education, Christian business, and I'm a published author. I have a new book out. My new book is called the Gold Rush Blueprint. And so I'm very proud of that. So make sure you check that out. It's a great book that I'm steering. We're looking at trading gold. Gold has hit, given what's going on with the economy, lowering interest rate environment, and also a lot of central banks switching over to buying a lot of gold and diversifying out of the dollar, namely the BRICS, the Brazil, Russia, India, and China. There's transitioning to gold, large amounts of gold being bought, transitioning out of the US dollar, out of the bonds, and they're accumulating this gold for a gold-backed currency based on the blockchain outside of the US system. So if you want to learn how to trade that, be part of this new gold revolution, and learn how to day trade gold for a living, then get my book. It's available at a great price, $4.99. And you can go to book.thegoldrushblueprint.com, go down into the description and click that and read it. We're going to unlock the secrets of gold. Why is it moving the way it's moving? How does it move? How to get started trading it. And it's my first book, and I'm so excited about being able to take the 30 years of experience I've had in the markets and place them in this book and place it in your hands. So get your copy of it and then tell me about it. All right, great. Okay, so let's get to it. This is our agenda. We're going to start looking at the major currency pairs, and we'll take a look at gold, the S&P 500, oil, but we're going to start with the economic news. The economic news is what drives currencies and drives the market in general, okay? So let's go ahead, and that's my group there. Oh, that's one of the things there. And we're trying to, man, keep going. We keep going. Keep going. I'm panicking right here. There's my book. Oh my God, I'm reading my own book. Right, so that's the Gold Rush Blueprint there. But I'm trying to get to my market heat map. Okay, and I thought we had it. We can do it again. My market heat map. You can tell this is live. It's going to be unedited. We're not going to chop anything off, but come over to mymarketheatmap.com. We're having a 50% off sale into the year, and you get access not just to you come to the site for free. You get access to one of 6 powerful heat maps, and also the economic calendar. Now, the economic calendar is a little shy. You have to hit the return button, click show more, and there you go. And you don't have to pay me a dime. You go right to the front of the website, and there's economic calendar and a major heat map, which I'll help you out. But if you want more, you can always go, again, get yourself a copy or get your subscription to it. And then you can explore, the other 5 heat maps, also other bonus material, charts, Forex TV, market streamer, financial market news, and a number of other bonuses, a list of brokers and other resources helpful for trading. In here, there's our economic calendar, also on the inside as well. The same economic calendar on the outside, we have it on the inside. So let's go ahead and we can look at that too. So I use the economic calendar as a way, and also check out our partner, Blue Guardian. Blue Guardian is a prop trading firm. You can scan the QR code and use Elite Blue 382, the Fibonacci level, and get a percentage off on any of the auditions. And so it's one way you can learn how to trade other people's capital, little OPM, other people's money, in order to further your trading goals, right? Undercapitalization is one of the number one causes of traders not having enough money to trade, right? So they also have a market guardian feature, which so you won't blow up your account before or breach your account. There's a way of setting it so it automatically pulls a plug on you before you over trade your account and lose access to it. So that's Blue Guardian. Go to www.blueguardian.com to find out more, and you can scan the QR code in order to get your audition. Okay, economic calendar, I have it set up, and we are looking at this week, starting with we're moving right along here. We're on the 16th. Show more, and we can scroll some more and show some more. All right. So on we have the Euro IFO business climate out of Germany. 87.3 was the previous number. We're looking for a jump up to 87.8. And then we would probably look at the Euro to trade RBA meeting minutes. Very important, as those were the meeting minutes from the last rate announcement. The RBA kept rates unchanged. We want to find out why they kept rates unchanged, and they're going to be telling us that, and that's going to impact the the Australian dollar. Big news coming out is the Bank of Japan interest rate decision. Ordinarily, I don't really pay attention to Japanese news, but lately Japanese news has been moving. The yen, usually it's weak during this time. It's been strengthening. The Japanese having a weak yen with high inflation is never a good thing. Products and services and things are very expensive for Japanese, having a very weak currency. And so you're starting to see them kind of catch up. The rate decision, we'll see. They've had negative interest rates. They have what we'll call a NIRP, negative interest rate policy for almost a decade. And so they're one of the few central banks on this planet that has negative interest rates. And so we'll see if they surprise and actually decide to raise interest rates. Since they have huge amounts of debt, almost like 200% debt to GDP ratio, having a strong currency is very difficult for them to have. If it slows down exports, they're basically selling exports in order to pay off their debt. And, so they're in they're kind of debt ridden like the United States is. So they're the third largest economy. We're the first largest economy. And the Japanese economy is basically a product of U.S. policy. We help them create their constitution, and we set them up for what they've done, which, and they've done a lot, but they've also gotten a lot of debt. In most countries, China is the number 2 economy, and it is hugely in debt as well. So I think it's not just an American thing. It's just a global thing, right? Spend more money. It's human nature to spend more money than you have. That's why you should learn how to trade, right? All right. So we're going to look at the yen pairs, and on the 18th. Tuesday, we have CPI out of the Eurozone, so we're going to have lots of inflation data. And so we're looking at inflation actually falling from 124.54 to 123.86. Inflation year on year falling from 2.9 to 2.4. And they're going to hit their inflation target, their 2% inflation target, before the Fed does. In fact, they have the same target. Inflation rate month on month final from 0.1 to negative 0.5. So that is pretty cool. The core inflation rate year on year, that's inflation minus food and energy, looking for drop from 4.2 to 3.6. Lower inflation usually means that the euro would weaken because interest rates would fall as well or not rise as much. And we're going into a period of time when the dollar actually starts rallying a little bit, going into the end of, tax loss selling, people going into the holidays. So you get people moving their money into bonds out of risk assets, moving out of stocks. You have some tax loss selling, people selling. They're going to say changing over their portfolios, taking a loss in 2023 and writing it off on 2023 taxes to offset any gains they made in 2023, and then buying those things back in 2024. So it's a game that Wall Street plays every year for the past, 50, 60 years. So that's something. So you'll see the dollar. You say, why is the dollar going up? It's like, yeah, and we'll talk about that when we get to the technical picture. Lots of Canadian data. And I was trading CAD yen the other day, Friday, in fact, Friday from 3 into almost into like close. And CAD yen was on fire. I was crushing it. It was just hitting. I go, what's going on here? I go, because we have all this CAD data coming up on Tuesday. And so CAD yen, I was just nailing this CAD yen long, CAD yen, CAD yen, CAD yen. I'm just like, my God, it's like they like $6,000 just hitting CAD yen over and over again, right? So we have lots of Canadian data. So I'm, you gotta be careful sometimes when you win a bunch of stuff on a bunch of money on a currency pair, and then you develop a love affair for it, and then it burns you and takes the money back, like some mean girlfriend or mean boyfriend, right? So it's important not to get too attached, but it's hard not to get attached to something that just like they brought you flowers and candy, and it was like gave you a back massage. I mean, that was a nice little back massage for $2,500 right there, right? So you're like, oh yeah, and then your judgment gets jaded. My judgment is impaired right now, so I gotta watch something like this, right? So anyway, going back to CPI, 3.5%, 3.2. A drop there, and then we're looking for inflation rate year on year to drop from 3.1 to 2.9. So we're going in the right direction. All the central banks want 2% target, and we are moving in that direction. Inflation rate month on month. That's why they have to keep rates unchanged, because if they keep going, they'll over tighten, and then the economy goes into recession because they took away the punch bowl too fast, right? They pulled away monetary accommodation too quickly. Well, we can see this is I think they've navigated what they call a soft landing. If you heard that in the news, they're like wondering, hey, can we create a soft landing? It's like, no, they never do. It's always a hard landing. It was a big crash, a burn, and some meltdown of some bank or savings and loan or global financial crisis, or a hedge fund blows up, or some country defaults. There's usually something systemic that happens. And this is maybe like the first time in like 50 years that nothing really super bad happens. And so it's like whistling, walking through the cemetery, like doo, 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 hoping that a goblin or a ghost or werewolf doesn't jump out from behind a tombstone. That's basically what we're doing, kind of whistling through the graveyard, because this has never happened where we go through a period of inflation and the period of rate hikes that nothing usually like happens. Like, are we that smart? Did we really navigate something? Or the last time that happened, things went really bad very quickly. So everyone's very cautious about, wow, these numbers look very good. They're dropping into target just really nicely. It's like, there must be something wrong with these. UK though has their inflation is their inflation rate year on year 4.6 to 4.4, probably not moving fast enough. 0 to 0.2 inflation rate month on month numbers are relatively benign, but the year on year we had 365 days of stuff, so it takes a time for this bigger number to actually change. This year on year number, MOM's month on month. The rate year on year, core inflation 5.7 to 5.5 is moving in the right direction. Core inflation rate month on month 0.3 to 0.2, moving along in the right direction. That's going to be the UK data coming out on Wednesday, December 20th. The pound will be in play, pound yen, pound dollar. We'll take a look at those charts. And then we have more euro data. The GfK consumer confidence. Consumer confidence is on the rise from negative 27.8 to negative 27. And then we're going to have some U.S. data, 10 o'clock news cycle. We're going to have the conference for consumer confidence going to rise from 102 to 104.3. And that's a pretty big jump there. Thursday, December 21st, 4 days before Christmas, our 8:30 news announcements start with initial jobless claims. And they look to be on the rise from 202,218. A higher number, usually good for the market, bad for the dollar. So we'll see. If that 218 is that's the forecast number, and they're usually pretty accurate on the jobless claims, and that could give us a little risk on rally going into Christmas Eve. Core PCE prices quarter on quarter, a number that's often watched by the Fed, dropping from 3.7% to 2.3%. that would probably send the markets nuts. We might see the euro rally, pound rally, big rally. If this number holds, if this is true, if this forecast is right, a big change in that would mean that the Fed, that's why the Fed said, hey, you're probably get some 3 interest rate cuts because I think we overdid it. And so, because things are coming down pretty quick. Look at GDP growth rate, GDP dropping, actually rising from 2.1 to 5.2 quarter on quarter. Pretty interesting. And price index quarter on quarter final rising from 1.7 to 3.5. That might have cause for some concern for the Fed. And then we're going to go right into inflation data out of Japan, 3.3 to 2.6. And then we're on the Bank of Japan monetary minutes. So they're going to actually give minutes to like telling us why they left rates or hiked rates. We don't know at this time, but we will know by this time. And then on Friday, we're going to have lots of UK data. We're going to have retail sales month on month. I miss the Super Thursdays. They used to have the Super Thursday UK data, and they had the retail. They had all these numbers, and it was like pretty exciting for the pound, right? I think they steered away from that. They're kind of like spreading it out and making it not so dramatic, just so drama queenish. Anyway, Friday retail sales month on month negative 0.3%. And looking at sales rising to 0.4%, and then retail sales year on year actually rising from negative 2.7% to negative 1.8%. And then we're going to have some more U.S. data. 8:30 a.m. The news cycle starts of core PCE price index year on year, dropping slightly from 3.5% to 3.4%, still going in the right direction for the Fed. Personal spending month on month, dropping from 3.5% to 3.4%. Again, moving in the right direction. Personal spending month on month, actually rising from 0.2% to 0.3%. Now, when you're looking at the dollar flag, you might want to look at dollar CAD or dollar Swiss, but they're actually trading the euro. The euro is considered the anti-dollar. So when we get into this news cycle, look at the euro and see how it's moving, and then look at dollar yen and look how it's moving as well. Personal income 0.2 to 0.4. That's a rise. That's also be concerning for the Fed. The Fed doesn't want you to make a lot of money, because if you take money and you'll spend it and you'll create inflation, and then hopefully that stuff is over for 2024. It'll be the last time I can say it. Can't wait till we get to a point where good news is good news and bad news is bad news, right? And if you're new to trading, you're like going, I don't get it. You'll get thrown off for a loop, because now it's like, well, this is good news. Oh, great. The dollar is going, the economy is going up. That's great, right? Now, if the economy is going up, it's bad, right? So then we have Canada data, Canadian data, Canadian data. GDP month on month, preliminary is supposed to drop from 0.2 to 0.1. And month on month, GDP is supposed to rise from 0.1 to 0.2. So it's like they give one, take one. And then we'll round up this week with the Michigan Consumer Sentiment Final, supposed to rise dramatically from 61.3 to 69.4. We have anything else on the docket? Let me just see if there's anything hidden. I think that is, no, that's for, yeah, that's it, right? That'll be it. Okay. So that's the economic wrap up there for this coming week. Now let's go ahead and get into the technicals. I know you guys are like, come on, Greg, bring on those technicals, because these fundamentals these economic data is boring. All right, let's go ahead and, all right, I'm going to go to I need to keep a clean template there. This is gold, the shiny stuff right here, right? And we can see after our historic all-time high, which I forecasted back in October, I said we're going to hit new highs, and we hit a new all-time high in gold, right? And then since we have sold off, right? We have sold off quite a bit. And actually, I'm going to actually start with gold, and we can maybe back out to So you can see that we are still in a very strong uptrend. We're just going to maybe pull back a little profit taking. We have a kind of a shooting star kind of candle there. Long wick, price closing back within the range. But it's very interesting because sometimes, when we have this, we come back in the range, we can, we still have a rising trend line that we can come back down. That we could see maybe another bearish candle here. This is like a Pinocchio bar, rejection bar. This is a full body green candle, and then sellers took profit and boom. And so we'll look for maybe a pullback. However, we are sitting on a nice bit of support right there, almost like a Harami candle. So we could see a little bit of bounce here. We could see some type of a bounce where we actually could see maybe a move back toward the 2050 area, maybe 2071 comes back into play, right? And so I'm short term, maybe short term bearish, right? But maybe medium term bullish, right? So I know. How would you say that? I mean, looking at this kind of candle here, we're basically stuck in a range, and we have a rising trend line here, right? So this is kind of a pretty difficult. After a big run like that, where usually we have some type of a three-wave correction, a little A, a little B, maybe C, maybe come back down. I mean, I think the bottom would be 1977. So I'm medium term. I'm looking. I'm kind of bearish. So I'm looking for a pushback. A pushback here. Back down to I would say probably the $2,000 area, the whole round number. We could probably see a test of that area. So let me just go ahead. I'm trying to find the arrow in the arrow. So I'm looking for maybe a bounce later on the year when they actually start cutting rates. I think we see new highs, but I think we pull back first. Okay. I want to start with shiny stuff gold. Now, remember, if you're interested in learning how to trade gold, flipping gold for a living, check out the book in the link below. Okay, let's go into the dollar index, the DXY, and this is the DXY has been. If you look at a monthly chart and what's going on here, we have been going down pretty strongly. But we are coming up on a rising trend line that has not been broken, structurally has not broken, as long as we have our low in place here at the 99 area. We can see the dollar continue to rise. We think it came to this trend line, and this is a brand new trend line, okay? And I'll show you the how we interpret the trend lines here, okay? I'm looking for circles, an ellipse. Okay, so we have our first point. 2 points make a line. That's geometry 101. If you took geometry in school, 2 points make a line. Now in trading, the third point on the line is actually the first test of this line, right? You remember the old those old geometry books, line segment ray AB or something like that, right? All right, so this is ray or point A and then point B on that that creates the line, right? So this is our line defined by point AB, and C is the first point on this line, right? Because this line didn't exist unless you had it. So this is the first point on the line. Now this line is tested at point C, and usually when we have a test of point C, price usually, or I say usually, rebounds from that area, right? So we have a well-defined trend line, has not been tested, and then now we have this is the first point C is the first test. And usually at the first test, we get some type of a rally back up to maybe support right? So we can see about, and so this is huge, right? Because it's a monthly line. So it's, we're just, and this is a close-up of it, going to a weekly, right? We're just tagging it perfectly, a perfect little tag there. Tag, you're it. So it kind of like tags the base, and it's going to steal second, right? It's going to slide. So we've got this area. Now, if it breaks this trend line, it can come back to support and come down here. But if this line holds, then we would see a strong bounce. We go down to a daily. We can see that other people, I'm not the only rocket scientist looking at this line, right? So you can see this is like forming what they call a Harami pattern on a daily chart, a daily Harami. So actually, I would say our first target on this would be here, right? Our first target was like the first hump, right? The 104.24. Okay, so what does that mean? Okay, well, we won't really trade that. You can't really like place a trade on that. However, this is the US dollar. DXY is the symbol for the US dollar. So if this is going up, the majors are all traded against the US dollar. So the dollar is going up, everything else is going down, right? So this is like a really easy way of trading by looking at the US dollar index, using the dollar as your co-pilot. In fact, we have systems and trainings within our course where we teach people how to have like one half look at the dollar on one screen, look at another currency, and then boom, when one goes up, one goes down, and you just buy and sell, and you just rack a bunch of money. And you can find out more about that in the description below. You can find out more about our courses. Okay, let's go ahead and go to the Euro, EUR/USD, and I'll show you what I'm talking about. And here is our monthly chart. And you can see we had a nice bounce, right, from a level of support. We can see that we have been really, really like just moving sideways for the past, however long time. It's just been, we haven't really gone anywhere. We've had a little bit of a, those back to the dinosaur days, right? It's like, I love going back that far. But we have this trend line. We just have the sloping trend line here. And then we have this downtrend here, just from the 2008, the financial crisis, and the dollar has been steadily going up against the euro. Okay. And so we have this big giant triangle that we're in. And we also had a trend line formed with two lines that we really don't have a third point tagging that line, right? But what's going on is we have higher lows, right? We have lower highs, so we have another triangle within a triangle. Triangle is another way, it's like a question mark at the end of a sentence. Or do you want to go up? Question mark. Do you want to eat Chinese? Do you want to have Thai food? Because so that's how a triangle is. Do you want to go up or do you want to go down? We don't know because it hasn't been resolved yet, right? However, there are some things telling us that this doesn't look very good for the bulls. We have a candlestick pattern, a Harami, which is a small body candle. It means indecision. But, you would think you want a vote of confidence like this candle. So once you had indecision, this morning star, you're like, oh, yeah, big bullish candle. Yeah. And this was like, kind of a wimpy kind of candle, right? Like the Wimpy Kid books. It's like the Wimpy Candle. I'm going to write a book called The Wimpy Candle. The Wimpy Candle. But usually, the Wimpy Candle usually leads to an explosive move. We go from low volatility to high volatility. So this is a compression on a monthly chart. We may see maybe a full body breakout and take out this low and then down. No, we're heading south side, right? And let's look at a weekly chart and walk it down. Come on down. It's like, okay, we did have a rally, but it's almost a double top, right there. So it really didn't make it. And so we have a low at like 107.29. If we can break through that, then we would probably come back and test this line briefly. And that'll be our first test of the trend line created by these two turning point areas here, right? So this line has not been tested, right? And so we do have 2 points here. this line hasn't been tested either. So I was like, well, nobody's passing the test. It's like these candlestick patterns are like ditching. They're not going to class. They're not taking the tests, right? So this is even looks even more bearish because we have a double top. We have a double top pattern, which is a bearish pattern where price rallies to a high, but does not go doesn't make it above it. So we have one top, right? And then we have another top right there, right? So, and then you have a bearish candle, rejection, right? You went up to the basket and boom, he got slapped down. You know, the ball got snapped out of his hand, right? So we have this rejection pattern here, a double top. And so usually that indicates lower prices. And we could see a move down in the euro. And so that would put us somewhere around here, if I could like find what I'm looking for, right? So we can see I'll farther move down, at least down to support. We have a nice bit of support down here. Rejection, buyer stepped in at 107.20. And so we can see a move down at least 107.20. If we break that down, there is another support area down here at the 106.50 area right here. And if we break that, there's all kinds of congestion. There's a lot of congestion here, which could support it at 105.14. But that's some 200 pips from where we are. And that would be a great short. I was shorting Ether earlier today. So we picked up some pretty good pips on that. And usually Ether moves in the same direction. I mean, the opposite direction of the US dollar. So if that was starting on the weekend, this could lead into further moves down. Okay. So we got rejection at the 110 area, and then prices falling, moving down to a 4-hour chart, and we can see our moving averages are curling over, and prices could keep falling. So, looking at our bulls versus bears, I would be very bearish. I think it just totally like falls out of the window here and just falls down and crashes. Why? Because we've got this whole this whole moving into the holidays, and the risk on the bullish people are probably just take a break. Okay. All right. Let's that's our. Let's go ahead and go to the British pound. We got a lot of pound news, so let's going to jump across the water, go across the English Channel, and check out the British pound. Remove all the drawings here, and this is our monthly chart. And you can see we really haven't gone anywhere in the currency. It's just kind of moved sideways because the U.S. dollar has been so incredibly strong. And again, we had a nice rally from the lows. We had our King Charles rally. We had our Queen Elizabeth passing away, kind of the bowing down of the currency to her. And now we had the coronation, and now we see some type of a trying to reinflate, trying to break out. We do have a rising trend line here. And we would like to see a possible move an ABC higher, but we have a higher low and a lower high, and we have like kind of an indecision doji. So we are in a kind of a sideways move. We were bullish if we can get above this old high, and we're looking at the 1.3119 as a top, and we're bearish below the 120.94 area. But if we broke the trend line with a bearish candle, we would probably be more bearish confirmation, and we're not going to get that probably to the end of the year. But we can. So let's go ahead and move it to a weekly chart, and you can see that prices, we just came short of the old high, But we still do have a modest uptrend, you know, probably a little bit stronger than the euro. So we may work our way. In fact, we do have a couple of points. Actually, this is 2 points here, third point on that line. We could probably go down to a 4-hour chart or daily chart to be able to see it even clearer, right? And actually, that was our first touch, first, second touch, third touch, and a rebound, right? But it's, we exceeded the old high, but now we've come back inside of it, right? And so we have another maybe rising trend line against this, right? And so if we come down from here, this is 126.84. We could probably get back down to 25.91, right? This is a harami. This is a 2-candle bearish pattern. And so usually we have a reversal, a continuation. The 4-hour chart, see, it's kind of breaking down. Oh, there's our double top right there. It's already breaking down. So we're bearish. Pound basically, we have some inflation data, and then we could see without the Bank of England hiking rates anymore, we could probably see a move back down to 25.04. Okay. All right. Moving right along. Let's go ahead and get to. We do have some Japanese data coming out, so I'm going to go to. I want to go to USD JPY, but I actually want to go to CAD JPY. Well, I think that might be a little more. So we'll start for a monthly chart. You got our Japanese yen. And here is our CAD yen. And then, so remember, as this is falling, it would be bullish for the yen. And this is rising, it's actually would be bearish for the yen, right? And so we're seeing that that we have a downtrend here, and note that those triangles, we have the indecision triangle, right? But we have a double top on this currency pair, and we can check other yen pairs too. 111, 11, 111, 111. Look at that, right? Topping action there. You can take a Fibonacci from the high to the absolute low here that we had back in 2009. We're sitting near a 786 area of resistance, a little piece there. So we could see the yen strengthen. The Bank of Japan may leave rates unchanged like they've done for the past 10, 20 years, right? However, it's the minutes and how they talk. And, that's the thing about it. If they are moving monetary policy by what they call jawboning, using their instead of printing more JGB bonds or buying bonds or selling bonds, they just say, hey, we would like to have a certain level on the yen or something, and they might move it with their mouth, not with actual monetary policy. And so it's kind of what we call stealth intervention, right? So we may see a retest of this 94.07 area on the CAD yen. But let's check in some other yen pairs like AUD JPY. And let's go ahead and check that out. And we can see also Japanese the yen. This is the Aussie yen. We have a double top there as well. We have pound yen. We can look at GBP, JPY, we can check that out too. All these are yen pairs, and we didn't approach a double top there. That one's kind of like we can't. No, yeah, we're short of that. So this one is an exception to the rule, but so another thing we can look at the JYP or JYX. JXY. Yeah, the Japanese currency index. That's a good one. And you can see that we have a nice double bottom on this. This is the basket. It's a basket of currencies versus Japanese yen. And we can see that we have a nice double bottom there. And we could see a move back up to maybe 78.57 here from this double bottom that is found. So it's on TradingView, the ticker is JXY. It's like the DXY, or the dollar versus all the other currencies. The dollar against the world. Well, this is the Japanese yen against the world. And we got a nice bullish reversal pattern here at the 65.74 area, which means that we see other yen pairs sell off against the, or other currencies sell off against the Japanese yen. Okay. So moving right along for economic calendar, well, we checked out the euro, we checked out the pound, we checked out the yen, fun with flags. And let's check out the Canadian dollar, right? Let's go ahead and check that out. And we checked out gold as well. So let's go ahead and go to, we're going to go USD, CAD, but we actually killed two birds with one stone when we looked at the CAD yen. But let's look at dollar CAD. And we can see something going on here. This is our monthly chart, and we'll remove all drawings and start from scratch. Interesting that we have the Canadian dollar versus the US dollar. And we have this rejection area at the 39.28. We do have a rising trend line if we connect some couple of swing points and extend them into the future. If we just connect 2 points, right? 2 points make a line. And if we were to extend to the right, right? You can see that that's our first point, our first point. That it didn't really touch it, but it was really close. It's like hand grenades and horseshoes. Then we rallied, and we rallied into a double top, and we dropped for a fourth touch, and don't know if fourth touches actually hold. I mean, really what you can do is you can take another trend line up here, and then now you've got your two touches of a fresh line if you make that into a fresh new line, because it never touched, right? So now you have two touches here. You could get a rebound from this area and for a move or for a shot back up to new highs, right? Or at least getting back to halfway of the candle. That'll be 37.18. We're currently at 33.74, right? Bulls versus bears. I am, I'm looking at this as a bullish. Right. So we're looking at that for a move possibly higher on this trend line touch. If we, I don't think maybe we get up. I mean, this is a monthly chart. Go to weekly, and you can see we are just, that line got creamed. And that big candle hitting on a Friday, sometimes it could go lower, but daily, okay, here it's pulling back a little bit. You can see it's trying to take off, right? It did puncture the line, and then you can draw a trend line across the top of that and look for some type of a rebound from that zone. This is a really cool entry zone. I like to be very cool to see what happens on Monday or Sunday, Monday with this area. Nice area of support, and it's struggling with it. We get a bounce and a break. So the dollar CAD, I am constructively bullish on the dollar CAD. Okay. All right. So that we can look at the S&P 500. We can do SPX. Oh, no, don't want to do that. I want to go here. SPX 500. We'll take a look at one of the indices, and they're all in record territory. New highs. Nice break. Look at a monthly chart, and we can see that we have made big gains, and we do have an old high up here. We haven't got back to the old high, 48.17, but we're like well on our way for that. Might find a double top there going to the year end. I'm going to remove all lines, remove all drawings, right? And so we've got we are in a very strong uptrend, very strong, right? And look, we got 2 points on the line. We haven't had a third point, so we could see maybe a pullback in February, and maybe a big extension moving into the $5,000, the 5,000 area. But we do have this area of resistance. This was the high that we had back in January 3rd, 2020. So we haven't been here in a year. There'll be a 12-month high if we can get it there. It looks pretty exciting. We can see that there's very strong moves here. And going down the daily chart, we've got small body candles, but going into the end of the week, going to a Christmas holiday, will we have enough juice to get there? That's the key right there, right? That's the $1 million question. But I am bullish this those higher highs and higher lows. We haven't gotten this old area. The old high hasn't been taken out. Structure says higher highs and higher lows, so I'm not going to fight it. Don't fight the trend, right? Take a look at Bitcoin, BTC, USD. And that was our flag pattern that we had back in the day, and we broke it. I said that we would have an extension that would be equal. Let's see if that came anywhere near that. And actually, we're a little short, right? And so maybe that's what we have for our price target. Usually, that would take us to 47,230, and we're currently at 41,200. So that's another $6,000 move, and maybe we're getting ready to do that. Dollar strength is coming in, but I think the dollar is like the toothless tiger, right? Like ding dong, look at which, the wicked witch is dead, right? I think the dollar has been has been such a scary part of trading anything. Nobody really wanted to trade anything, no crypto or gold, because the dollar was always smacking it down with the higher interest rates and Jerome Powell. However, with the Jerome Powell announcing basically, hey, I'm going to have 3 interest rate cuts next month and next year. Basically, he's just saying like that you have a tiger or a lion without any teeth, right? It's like, yeah, bite me, bite me, bite me. You don't have any teeth. You don't have any teeth. You have no interest rates. Ha ha. Right. So it'd be interesting to see how far this goes. Do we actually break the high there? Do we stop, knowing that interest rates are not going to be a factor against Bitcoin? And if they don't, then do we see the old high of 68,994 come back into play, right? We do have some resistance here, but this is we use Fibonacci expansions too if you really want to get into that. And Bitcoin is a great thing to trade. It's great. You can trade on the weekends. I just wouldn't hold it physically, only because if there's a blackout, I don't know how I can get my money out. Oh, I have a cold wallet. It's like, yeah, take that to the store, buy a gallon of milk with that, right? So 2.612 is right there. Look at that. The 1.618 takes us to 52,489. Yeah. So we do have a very strong uptrend, and looks like a lot of fun. Okay. Well, anyway, guys, I want to thank you so much for being with me. Remember to check out Elite Traders University. Elite Traders University is your #1 place to learn how to trade professionally in 90 days or less using my proprietary approach. And I've helped hundreds, if not thousands, of people become professional traders using my unique system, my 3-step process to take you to a professional trader. Come on in, change your trading, change your life, get a free masterclass. It's about 45 minutes long, shows you who I've helped and how the system works, and even introduces you to the system. And also, there's also our Income Boost ebook, our free masterclass, our Forex Foundations course. We're taking enrollments now for 2024. So if you want to get a start on your education and really learn how to trade the right way, you're tired of DIYing it, you're tired of going from one YouTuber to another YouTuber, and I've been trading before. Some of these skills are even more, and so you want to learn a consistent process for making money in the markets in a powerful and positive Christian-based environment. Then check out Elite Traders University, and I look forward to seeing you soon and coaching you. I'll see you on the other side. Remember, the reason for the season is Jesus Christ, and I wish you all the best. Bless you. God bless all of you. Thank you so much for liking, subscribing, and sharing this video with other people, and giving it that thumbs up so the algorithm will know what's going on, that there is something good going on, and it's happening to everyone who joins Elite Traders University. Okay, I will talk to you soon. Thank you so much for watching, and